1 year on from when the SNB chose to peg the Swiss franc to the euro, and François Oesch from Banque Heritage joins me in the studio now to discuss the impact of this 120 floor on the Swiss economy. François, thank you very much for coming in today.
Thank you.
Now, why is this time different?
Well, if we go back to a year ago, in September of 2011, the Swiss National Bank decided to peg the Swiss franc to the euro at 120. This decision was taken following several unsuccessful measures. First, the Swiss National Bank decided to lower the interest rates to nearly zero. They increased the sight deposit up to 200 billion Swiss francs. And they intervened in the FX market in 2010 and 2011, just trying to weaken the Swiss franc by buying huge amounts of euros versus the Swiss francs. These interventions resulted to a loss of 13 billion Swiss francs. After these measures, and when the Swiss National Bank did peg the Swiss franc to the euro, the public opinion was quite skeptic about these measures. And they get into memory the fact that the Swiss National Bank took the same decision in 1978 when they decided to peg the Swiss franc to the Deutschmark. At the time, this decision brought a huge inflation. The inflation went from 1% up to 6.5% in the following 3 years, and we assisted also to a real estate bubble.
And what therefore have the risks been for the Swiss economy?
Well, the risks today are or have been a euro blow-up or a European country meltdown. I think the Swiss National Bank took a bet on a positive outcome of the European debt crisis. And that's what we've seen last month following the ECB decision to support the Southern European countries by buying fixed income products. The Euro Swiss traded quite quickly above the 120 peg up to 122. The other risk probably today is also the FX reserves that has been accumulated by the Swiss National Bank. Today, at the end of August, the reserves are amounting to 418 billion Swiss franc. And we know that it counts for around 70% of GDP. We saw the monetary base also that expanded to 50% of that GDP. Looking at the figures that have been published by the Swiss National Bank, today we saw that the amounts that have been bought were quite huge. We are talking of about 50 billion Swiss franc a month. And June, July and August of this year were probably bit bigger amounts as the crisis worsens in the wake of an ECB decision. We saw once again that these huge amounts of euros that the Swiss National Bank bought have been deposits to the Bundesbank at zero rates in terms of security, to be sure, and to make sure that these reserves were carefully invested. And finally, we know that increasing liquidity is probably not a very good sign for the economy. So there is a risk here, once again, to see some losses on these reserves that could be quite painful for the Swiss economy, knowing that the Swiss National Bank is distributing the profits to the cantons.
So what could make the Swiss National Bank change their policy, do you think?
On the long term, the Swiss National Bank could decide to abandon this peg. If we see the Swiss franc coming back to an equilibrium level versus the euro, we know today that the Swiss franc is probably overvalued by 10%. So that could be a reason for the Swiss National Bank to abandon this peg.
Ultimately, has the Swiss economy benefited from this decision?
Sure. If you take the banking industry as an example, commissions and revenues are all calculated in euros and dollars, and costs are counted in Swiss franc. Before September 11, the shooting currency was making huge damages in the Swiss economy and through the Swiss companies, especially because companies had to take urgency measures to fight against this strength of the Swiss franc. Installing a peg at the time gave time to companies to adapt themselves to a more stable environment and a more stable world. This company had increased their profitability, and we've seen today that the economy grew at around 1.9%. And seems to show quite good resilience for this year and probably next year, even if we know that things could deteriorate quite quickly. Exports remain stable in Switzerland, and that was a bit astonishing. And the peg gave also to the economy some fresh air and time for this company to take further steps to increase their profitability. In the future, probably that pressure on the Swiss franc will fade, and the Swiss National Bank could leave that peg. Swiss company might be then be able to come back to rebuild their margins.
And lastly then, François, what are your projections on the Swiss franc if we take all of this into consideration?
Today I assume that the peg of 120 will remain alive, and that the European Union and European picture will remain the same. Probably the Swiss National Bank will keep to defend this level, and we might assist to a slightly weakening of the Swiss franc up to 125 in the coming quarter, going alongside with the decision to find results to this European crisis from European institutions.
François, thank you very much.
You're welcome.
Stay tuned to Dukascopy TV for more exclusive interviews. For now though, goodbye.